Hello and welcome to the latest Huddle. Tim Paul here, editor of Gambling Insider, and I'm with Matt Davey, an old friend of ours, an old guest, CEO and founder of Tekkorp Capital. Matt, thanks for joining us, and how are you?
Good to see you, Tim. Very good.
Great to be here in Vegas with you. Obviously, plenty that you'll have to do at G2E and likewise. But can you tell us, to start off with, a little bit about the latest developments at Tekkorp and what you guys have been up to?
Yeah, no, it's a great question. Look, we have been active investors in the industry since really the end of 2018. And so we continue to look for great opportunities. We continue to look for great entrepreneurs that we can back. What we're seeing today, I think, is just as much demand from entrepreneurs for capital as we've ever seen. I kind of thought things would take a little bit of a pause in the marketplace. We're not seeing that at all. So it's an interesting time. We're also seeing more mature companies come back to the markets looking to raise additional capital. I think companies are looking to stay private longer while the public markets are still somewhat challenging. And so we're having good discussions with those businesses as well.
Interesting, yeah. There's definitely some big companies in the industry that are still private, and you'd think they might have gone public by now, but it's not for lack of size or lack of success.
No. Yeah. No, the public markets are challenging for two reasons. One, the IPO window, some people have talked about it being open. It isn't really. There's been a couple of great IPOs, but they are now trading at price or below issue price. And so it's hard to go public. The second issue is that if you are subscale in the public markets, and by subscale I mean anything under 2 billion or so in market cap, there's just a lack of liquidity in the industry at the moment. I think people are preferring to keep cash on the sidelines now. You can make 5% in treasuries, as opposed to putting it to work in the equity market. So it's a challenging time in the public side, and that's why I think a lot of the companies, even really healthy, fast-growing businesses that under normal circumstances would go public, are just choosing to stay private and either raise capital or look at other strategic alternatives.
Yeah, no, that makes a lot of sense. And you've just demonstrated kind of a knowledge of the market at the moment, but you've been around for a while in a good way, yes, in a complimentary way as possible. You know your stuff. You've played a key role at various organizations within the industry. So for that reason, I thought the rest of the interview we could do things a little bit differently and ask you a set of sort of key questions about your experiences and see what we can find out and talk about those. To start off with, I wanted to ask you, what is your proudest achievement in gaming?
Look, that's a great question. There's many ways to answer that. I think taking a business that had really 5 people in it at the start, that had no spare cash, and being able to raise enough money, and then build that business into a company that had 1,500 staff and 300 customers around the world, and selling that into scientific games. I think that was a great 15-year journey, and it'd be hard to top that.
What's it like now, sort of seeing Light and Wonder machines everywhere, and obviously you've still got the Scientific Games name in the lottery. Given the part that you played in the history of that, how does it feel to you? Sort of seeing that?
I love it. We innovated in that business. We built some technology that's still alive today, which is great. We also put together pieces that are still a key part of the fabric of Light and Wonder. Matt Wilson and Dylan Slaney and the guys have done a great job, I think, in taking that torch and carrying it forward. They also carved out part of the business, OpenBet, and sold it into Endeavour. And I think Endeavour's an amazing business, and I love what Jordan and the team have done over there as well. So no, it's great to sit back and watch those businesses go on to really invest in the digital space.
Absolutely. On the flip side, what is your biggest career regret?
It's a great question as well. So I think there were times during that 15-year journey where we chose either not to get into certain markets or not to get into certain product sets. And had we have done that, we could have had an easier life, a faster journey through the company development side. There were a number of areas where we said, no, we either don't understand it or we're going to sit on the sidelines. One of those was social gaming. We kind of tiptoed into that, didn't get it right. And if we had got it right, I think we would have created a lot more value for our shareholders as well.
Were there any other examples outside of social gaming? Were there any maybe territories or geographies, or is it more to do with maybe types of gaming?
So we certainly missed the boat on a few types of gaming products. Our live dealer, for instance. We took a crack at poker and tried to get sufficient scale we failed in getting to that scale. Not by much, but enough for it to be terminal for that product line, and that was definitely something that hurt us as we went through that process. In terms of markets, look, I think we were kind of more on the cautious side when it came to markets, but that served us well when it came to selling into scientific games, for instance. So there are pros and cons to that.
What was your riskiest ever move? And by that, this can be something that succeeded or failed. It's completely up to you, really.
Moving into the US back in 2013, our view was we would not gain market share against some of the big incumbent software suppliers in the European markets. And so better to skate where the puck is going, and we thought the US was where it was going. But we really didn't have anything to hang our hat on other than one state, in the state of New Jersey. And then a couple of things really fell into place for us. We were able to win a position with Sportech at the time, which had great relationships with racing businesses and sports businesses in the US. And bring our technology. And then we're also able to win a key relationship with a wonderful gentleman called Morris Bailey, who owned Resorts Casino at the time and took a risk on us. We had effectively unproven US-based technology at the time. So we spent a lot of capital to get into the market, and we really didn't have much in the way to help underwrite our future around it, other than to get lucky. And obviously we were successful at getting positioned there, and then we ended up supplying something like 40% of the product into the New Jersey market as the rest of the US caught up.
It's interesting to hear of that, as at the time it was a risk, but looking back, sitting where we are now, where US gaming is, it's interesting to hear that was a risky move, because obviously with hindsight you'd say, oh, no brainer, look how well it turned out.
Exactly. No, exactly. I think a lot of things we see in the industry make it a lot of sense in hindsight. But when you're at the coalface making those decisions day by day, you don't have that certainty.
Yeah, absolutely. If I were to ask you what your best investment was, and this, I guess, could include Tekkorp as well as Light & Wonder, again, wherever you want to take it, but best investment, where would you go with that one?
So when we were building out NYX Gaming Group, we invested in building our own platform to aggregate game content. And that was probably our best in-house product that we put a lot of capital behind. That was a first for the industry, and it's certainly, I think, created a whole new industry for entrepreneurs and other game developers that continue to benefit from that today. In terms of buying businesses, I think the OpenBet was a key milestone transaction. We were undercapitalized. We were the smallest competitor in the process that Morgan Stanley running at the time. But we were successful in pulling that off, which was a miracle against miracles. So that was probably our best acquisition, just because of how hard it was.
Those last two questions, I guess there's a correlation in terms of best investment and biggest risk. When you were thinking of what your best investment was did the amount of risk involved have something to do with that, or was it maybe more kind of the negotiations and the deal you got, that kind of thing? Yeah,
no, it's a combination of the risk and the complexity around the negotiation. So the OpenBet transaction was an incredibly complex deal as well. We had investors all around the world. We had different forms of capital between the debt. We had penny warrants, and we had public equity to manage. And we had a Canadian listed business with US operations buying a UK business. And in the meantime, we had the UK vote to exit the euro. So it created all sorts of kind of problems in the capital markets, as well as getting our stakeholders around that. So it was a complicated deal. It took a long time, and we were definitely undercapitalized and shouldn't have been the winner. So I tend to look at that as our hardest deal, and probably the one that really put us on the map.
Absolutely. As you've already demonstrated with your answers, you've seen gaming change, you've seen trends, you've seen companies rise to the top, some maybe go the other way. What is the most surprising industry success story that you've seen, in your opinion?
That's a great question. As I think through everything we've seen, I think watching the DFS businesses create market-leading share in sports betting here in the US, I think has been an amazing transformation. I think a lot of people would have put their votes on the land-based incumbent gaming companies dominating the market, and that's not the way it's transpired. And I think that's a real credit to the businesses that have shown this entrepreneurial flair and really captured market share between the guys at FanDuel and DraftKings. So that's, I think, probably been one of the biggest surprises as we've watched over the last 5 years, really.
I think that's a great answer, and gives me an opportunity to maybe put you on the spot once more. Obviously, we've got ESPN Bet and Fanatics entering, and ESPN Bet, obviously there's that convergence with the media model, but they have a big fantasy database as well. Do you think that FanDuel DraftKings model, whether it's from Fanatics using merchandising or maybe ESPN using TV and fantasy, do you think it can happen again with those kind of brands?
It's a really good question. The way I think about it is we've seen three kind of different approaches to solving the marketing challenge. Mm-hmm. The reason why marketing is such a huge issue is typically, operators spend 30 to 40% of their gross gaming revenue back into their marketing budget. So it's a huge part of the P&L when you're building out a profitable business. So the first is just your standard bread and butter sports betting businesses. Your Ladbrokes, Williams Hills, FanDuels, DraftKings, for instance, that have just a core sports betting proposition. And then you've seen businesses try and lever media brands. So we've seen Sky Betting Gaming is the banner example there, but we've seen others as well from Sunbet, Foxbet, and others. And then the third has been trying to capture individual personalities, so the Jake Paul of the better models. Yep. So we've seen these three type of approaches. And then underneath that, we've seen different business models applied to it. So you've got core real money gaming, sports betting. We've seen DFS, which has captured a different market share. It has a different set of legal constraints as it goes through the US. And then we've seen sweepstakes, and we've seen some of these social casino models go into the market as well. So I think the ESPN and Barstool's models tries to capture the marketing benefit of those well-known brands. I think it's yet to be seen as to whether they can get traction and success. Mm-hmm. We're not talking about a startup market anymore. We're talking about one that's midway through its growth in adolescence, I think, in the US. So it's highly competitive. And you have to imagine that most players have already seen brands already put in front of them. It's not like you're starting with a blank sheet of paper. So I think it's a great position for us to be able to watch and wait and see. You've got great operators. Jay Snowden and the team at Penn are fantastic. And there's no better known media sports brand in the US than ESPN. So you've got to say the ingredients are there, but it's certainly not going to be easy. Mm-hmm.
I think again a fair assessment. This next question might take a bit more honesty from you. I mean, you've given us a very honest answer so far, so I don't think there's going to be a problem. But if I were to ask you, what was the biggest trend you thought might take off that actually didn't?
I guess the obvious answer would be we thought iGaming would have probably a stronger hold in the marketplace. It would be easy to dovetail that on the back of the sports betting expansion. That certainly hasn't been the case. 5 states so far, and it looks like it's slow work. And then fixed odds betting on horse racing is something that we've spent a lot of time on. Yeah. I'm the executive chairman of a company called BetMakers, listed on the Australian Stock Exchange, and they've been at that market for the last couple of years, and it's been very slow. There's a lot of stakeholders to get together, so it's not solving a simple problem, it's more of a complex problem. But I guess we had hoped we'd see faster traction on the expansion there.
What are the main things holding those two back? I mean, with iGaming, is it very much maybe a political, almost cultural opposition in the US?
Yeah, we've seen it in Europe and Australasia as well. It's hard to fight for votes to say we should see an expansion of casino-style gaming. I think sports betting's easier for politicians to get behind. That said, the revenue model behind iGaming is obviously stronger and more profitable. So when you're looking at tax revenue, for instance, it's easier to mount an argument around the expansion of iGaming. In my mind, the key question shouldn't be whether you can play on online casinos or not, because everybody can. The question is, can you do it in a regulated, safe format for consumers? And I think that's one of the key reasons why we should see regulated iGaming expand well beyond the 5 states it's in today. And then on fixed odds betting around horse racing, look, that's new to America. It's not new to the UK. It's not new to Australia. It's been around for a couple of decades in those markets. And I think the incumbents are always concerned when something new comes along, and it just takes time to get comfort. We are very comfortable with the fact that you can have both pari-mutuel wagering and fixed odds betting on racing in the US and have those live side by side. In fact, we think it grows the market, doesn't shrink the market. But I think people are cautious when it comes to that. So we need just to go through that process and make certain we don't try and jump ahead too far and take everyone on that journey.
Speaking of something new, my final question or topic for you, a bit of a prediction. In 2024, what do you see as the main maybe not new, but the main trend that's going to really sort of potentially change the market or really stand out?
I think we'll see one or more of the DFS and sweepstakes type business models go public either through acquisition or IPO next year, and I think that's going to really change the nature for the incumbents in terms of how they think about their business models. I think a lot of people are skeptical and sitting on the sidelines, but I think you'll see some M&A activity there. I think it's definitely going to open up more options for people in the marketplace.
Interesting. No, that is a quite a concrete prediction and definitely would shake things up. But yeah, Matt, thanks very much for your time. Always a pleasure to have you on, and I'm sure we'll speak again soon. But good luck for the rest of your week in Vegas, and thank you for your time.
Thanks for having me on, Tim.